Let me just note one other thing while we're here. When you input certain variables, what you can do is you can name this cell. For example, I've clicked on cell C8. I'm going to go up into this name box up in the top left, and I'm going to type home, and don't leave a space, maybe do an underscore, price. Now what you'll notice is that this cell is named. That's a named cell. Next, I'm going to go to down payment percentage, and I'm going to type down underscore payment underscore percentage. So the name can actually be quite long, so that's named. So I'm going to go back and change the down payment calculation by deleting it and going equals home price, and you'll see that the name home price comes in now rather than cell C8, and it makes your formulas a little easier to read. Now I'm going to multiply by the down payment percentage, and so now formula is still correct. You'll notice I can change this to be 100,000 and it turns out to be a 30,000 down payment, but the formula when I hit F2 provides a little more information as to what that calculation is doing. So I'm going to do that again as well for the down payment dollar amount. Down payment amount, because I want to use that in computing the loan amount. So to do the loan amount, I'm going to hit equals in cell C11, click on home price minus the down payment amount, and enter. Next we'll put an interest rate. Now the interest rate is 5.5%, but I'm going to enter it as 0.055. I'd also like to name that cell, so we'll call that interest rate and hit enter. Another bit of information we need from the user is the number of years that this loan will last. So I type in 30 and I'll type in loan period years. So I'm just naming all these cells because it'll be nice later on to refer to them. Next, payment. The payment can be computed based on the information provided. So I'm going to type equals, and I'm going to use a function in Excel called the Pmt function. Pmt. Excel has numerous built-in functions. You can find those functions by going to formulas and, for example, financial, and I'll drag down here and you should see PMT. So that would be this formula, and I could click it, and that would bring up these function arguments, which you can type into this box: the rate, the interest rate, the number of periods, the present value, future value, and the type, whether the payment's at the beginning or the end of the period. Or cancel that. I can just hit escape to get out of that formula. I can just type equals PMT. So whatever you prefer, you can bring up the formula, and it does provide you some help, as you can tell, how to make these computations. So the first bit of information in the PMT calculator is the rate. So the rate, I'm going to click on that cell, which is cell C12, but you'll notice the name interest rate comes in. That interest rate, though, is an annual interest rate. And maybe I could have named it annual interest rate to make this math seem a little more obvious. But since I need to compute monthly payments, I'm going to take that annual interest rate and divide by 12. Next, I need the number of periods. So I'm going to click on cell C13. That brings up the loan period in years. But since I need to convert this to monthly payments, I'm going to multiply that by 12. So that effectively, on a 30-year loan, means it will be a 360-month payment life. Hit a comma, and now this is asking me for the PV, which is the present value, meaning what is the principal amount that's being borrowed now. So we can go up and click on the loan amount. Looks like we haven't named that cell, but we'll leave it for right now. We can come back and edit that later. And now I can finish it off. If I did want to say maybe at the end of the life of this loan that you'd have to still pay some amount, for example, maybe we'll pay $50,000 of this loan off over 30 years and the remaining $20,000 would be paid at the end of the life of the loan, like a balloon payment, then I would put that in as future value as the balloon payment. But in this case, we'll assume it's a fully amortizing loan, meaning it will be zero at the end of the life of the loan. In this case, I would like to go back and change that, so I'm going to go back to loan amount and cell C11 and type loan underscore amount. And so I can get back into my payment, hit the F2 button, and where it was C11, I just can highlight that and then click on C11 again, and now it recognizes that that is loan amount. So I think this works pretty well. Let me change one more thing because I think it will be a little more intuitive. On interest rate, I'm going to call that the annual interest rate instead. Annual interest rate. Now go back to my payment, hit F2, and instead of interest rate, I want to see if it'll come up as annual interest rate, which it does, and hit enter. So I think that formula now should make sense to use. We've got an annual interest rate, which we've divided by 12 to get down to a monthly interest rate. We've got a loan period in years, which we have to multiply by 12 to get the total number of payments, periods, in months, and the loan amount, which is the present value. And we hit enter. You'll notice that the payment comes up as a negative number. What that does is that represents a cash outflow. If you understand your accounting, that represents a credit effectively. But if we want it to actually be presented as a positive number, we can just hit minus. So I went back into edit, hit minus, and you can show that it comes up as a positive number. With that, we're ready to create our amortization schedule.